Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ. Good morning, AJ.
What's up, Sip? How are you this morning?
You know, getting over a little bit of a cold, but feeling very excited to eat some turkey and mashed potatoes next week.
Yep.
Today is November 17th. This is episode 107. Last week, we talked about the rally. I looked at the market this morning, and I was shocked to see that we're continuing the rally. And we kind of had the question of, does it have the legs to go through or not? And it seems as it does. AJ, what are you seeing from your end?
Ever the optimistic equities trader, right? I mean, we had a couple of good pieces of information this week. First of all, retail earnings. This is the week of retail earnings. We had Home Depot, Target, Walmart, a lot of those players reported earnings. Nothing so bad. In fact, Walmart was telling us that, essentials is definitely there. Discretionary spending is lower. That means people are out there buying things that, are important, like milk and eggs and things like that, and not so much buying things that, they don't really need, that they want. But Walmart was saying that these raw goods are coming down in price, like the milks and the eggs and things. These raw goods are coming lower in price, which is a good thing. In fact, it was only Home Depot who was saying that the overall biggest expense for retailers right now is labor, right? And we know that. We've seen an uptick over the last couple of years in everything, not just our costs at the grocery store, but in our wages. So labor is one of the most expensive costs, but everything seems to be doing well. And then add to that, we had our consumer price index that was reported on Tuesday. That really got our optimistic investors stoked because it basically said that the Fed actions are working. In fact, they were working faster than expected. CPI was low. And then on Wednesday, we reported producer price index final demand. That was low. Retail sales is okay. What was the other one? I've got it right here. Let's take a look at my screen at our economic calendar. We had our retail sales. We had our consumer price index. And then on yesterday, we had industrial production. They're all doing what we would expect them to do. So there was an uptick, especially after the consumer price index said that this inflation worries is much less. And then there's been some stagnation. Whenever there's a big gain in the markets, then investors wonder if that was too much of a gain. And so there's this little game and they're waiting for the next best news. But things look to be positive, but I always am a bit cautious.
And so the consensus be that this week we saw the follow through because inflation was tamed, in the sense that the corporate side was kind of giving us that info. We got some of the data, and then technically it just seemed to time correctly to get through one of those levels that was looking like it might need a little bit more fuel to jump through.
Yeah, as of Tuesday, I was actually surprised when I, saw the jump up in morning and then it kept going. Remember, we had these levels. This is part of our retracement analysis. So, as of last week, we were talking about, well, we got above this 100% level. That means that technically that's the end of this downtrend. We saw the downtrend officially end on October 27th. We saw this new uptrend begin on October 11th. But I've got to caution everybody that we never really call a trend mature until we've got a couple of tests of support and a couple of tests of resistance. The more tests of support, more tests of resistance, the more that trend is then bought into by the masses of investors, right? And so we don't have that. This is just a solitary move from a bottom reversal. We haven't yet got a confirmation that the top reversal has had. So I'm very, very cautious to buy into that we've actually flipped. For me personally, I need to see a trend being mature and ideal. And so far, we're a little bit, for lack of a better word, premature in calling this. But this move is pretty strong. We bumped up higher than this $4,438.20. So I think there's a short duration positivity out there. I'm just cautious to call this a full on uptrend right now.
Yeah, and anybody that's new to trading or investing and that is looking at AJ's screen right here, you see that little the green arrow, or we did, which is AJ's custom indicator, and we haven't seen a reverse of that yet. And so, at least given your uh, parameters, it's still in an uptrend. I do have a question about the green area, right? So we got the green, we've got the red,
Hmm.
we got the purple.
Hmm.
So
Hmm.
what is the green area telling us from, like a high level perspective?
Yeah. So we call these different reversal to reversal moves. We call them either range expansion moves or range contraction moves, right? Expansion moves are whenever they're greater than 100% of the previous move. So you can see that here's that 100% line. If I go across the screen here, you see that lines up with the top of the previous move. So we went into a range expansion move the minute we went above that line. Now, going into the green zone is more of an ideal move. So the getting above 100% or below 100% kind of tells us whether or not we're biased to the bullish direction or biased to the bearish direction. But getting into this green zone for a range expansion means that that's kind of an ideal trend following. In other words, there's no question of, are we going into sideways channeling? This is definitely an expansion move that's buying into this uptrend thought. Now, again, I said that's not mature. In order for us to get a mature move, once we find our top and kind of stall out wherever we are, we would then retrace, and we would want to see this contraction move come into the pink zone. Now, the pink zone isn't defined yet because we haven't found a top yet, but once we find the top, we'll be able to define where the next pink zone is. And that's where we would ideally want to see the contraction move go to before we expand again. So there's a lot of moving parts to call something a full on like bull channeling trend. And we're just not there yet. And I'm not really buying into the idea that that's it, any more than we're just in some excitement right now.
And with Thanksgiving coming next week, do you think that's going to have any effect on the move this week?
I mean, it could. The seasonality, remember Black Friday, although I've been seeing these Black Friday sales starting way before Black Friday. The whole history behind Black Friday is that the retailers out there in the world would be in the red all year. And it was on this Friday that follows Thanksgiving where a lot of people would go out and purchase, gifts for the winter holidays. It's on that Friday that finally for the year these retailers would be showing a profit. Now, I'm not sure, especially with electronic retailers and what's happened in just the last 10 to 15 years, kind of upending the whole retail market, if that's still the case. And so they use Black Friday kind of indiscriminately for any sale, and they've been starting as early as the beginning of November. But there's a seasonality for sure. All the retailers have been reporting that discretionary spending is down, but I still think that folks, they like to have a good holiday season. So seeing an uptick, especially in the retailers, wouldn't be unexpected, but I think it might be, and we'll have to see. But from what I'm seeing, it might be a little muted this year.
For sure. And I have one follow up question before we continue on with the show. And as a premium seller, right, your options trading strategy around selling premium, what does this move, this recent move, how does that impact your perception of the
Mhm.
way that you sell premium in some of your positions?
That's a great question. So this, when we were, all the way from, when did it start? It started on July 7th. And July 7th, we called a downturn. We had been in a nice uptrend up till then. July 7th, we called it a downturn. And it was on September first that we said, okay, this downtrend is not just kind of something we want to trade sideways choppy. It's something that really is taking up some speed. So when we have that sort of maturity and that sort of understanding of what the trend is doing, we can think farther out with our investments, especially our premium selling trades. So a lot of times we'll plan out these premium selling trades. We'll make 1 or 2 slight option adjustments every month. And these things will last ideally 5, 6, 7 months. When we have a transition like we've been having in the last couple of days and some unexpected moves, it kind of throws a wrench into our long-term planning. And so when we plan out our trades, a lot of times if we can plan out long terms, we can, really kind of really believe in these long-term patterns and therefore make decisions. We'll often make decisions where we have smaller profits up front, but because we're planning on the longevity of the trade, we're going to get the bigger profits on the back end. When we have a shakeup, kind of a transition that, again, it's not mature yet. We're not sure really if we want to base our next moves on a long-term uptrend or some sideways channeling. It just hasn't materialized yet. Maybe we want to start thinking about our premium trades, taking bigger profits up front instead of investing in the longevity of the trade. Because if the pattern knocks us out because we plan on one thing and the pattern does another thing, if we planned for a shorter trade, taking those profits up front, that kind of benefits us. So I've been telling my program participants, let's get a little bit more short-sighted for the next couple of weeks. Let's be a little bit more nimble, especially on any sort of exits that we need to do. Let's make sure if we're in the phase where we've got our protective options in place, let's get them in place. Because once those protective options are in place, we're good to go. So being a little bit more cautious on the risk side is where we are right now until the maturity in the next move establishes itself.
And real quick, have we been seeing a pullback in the VIX? Is the
Yeah.
right? I would assume that when the market goes up, the excitement or the fear drops a bit.
The VIX is back down to, kind of its lower levels. And this is actually, we've talked about, SIP, you and I, how you can hedge a lot of your portfolio trades with the VIX. We're looking for a nice bottom signal, and then we're going to use that strategy that we talked about a few months ago, where we're going to be, basically creating a debit by using a vertical spread to the downside, and then creating a credit, again, using another vertical spread to the top side. That credit and that debit will offset themselves, creating basically a zero-sum trade. But any sort of pop to the top side, if there's any sort of, surprise that comes in December, that trade would cash out big time. So a lot of times those surprises hit the other trades that we have, especially premium selling trades. This type of thing is an offset to that. And it usually, because the VIX, human nature says that our confidence level never gets so high, but when we get afraid, when we have fear interject into our lives, it tends to spike. So that's what that trade really does. It takes any sort of risk, but it's a risk around increased confidence, and it positions it for, if there's a surprise, we'll be able to profit big time on that trade. So I've actually been recommending that to some of my traders as well. Let's get timed and put that trade in place.
All right. We'll continue to keep an eye on things. I know that AJ dropped a few gems there. If you're interested in seeing more, learning more about premium selling, the specific approaches that AJ takes to growing your investment account, to growing your account into almost like a monthly paycheck, we've got just the thing for you. He's got an awesome workshop, a daily workshop where he goes over 4 shortcuts to growing your investment account into a 7-figure income. So we went ahead and threw the link to that in the chat. So head on over there and check it out if you haven't. Otherwise, we've got a special guest on to help us make sense of what's going on in the market and maybe even open up our eyes into finding some different ways to make money as a trader, as an investor. And so we're going to take a quick break. We'll bring on our special guest. We'll see if he's got any secrets that he can unveil for us, give us a little bit of insight. Otherwise, we'll be right back and we'll keep the show going. See you in a few seconds.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Moving on to our special guest. So we've had a couple on the show over the past few weeks, and we don't shy away from different approaches, right? So AJ has his specialty
Very focused approach,
in premium selling, but as we've discussed, options, there's 29 different ways to trade options, but then we've got futures, we've got ETFs, we've got stocks. And so today we've got a special guest. His name is Ryan Bailey. He is the founder and chief trader at Vici Trading Solutions. And so let's go ahead and bring him on. Ryan, welcome to the AJ Brown Show.
Thank you guys so much. Thank you so much for having me, guys. Really appreciate being here.
Yeah. Without a doubt. AJ is from my part of the world, Chicago, Illinois. Looking at your Twitter profile, 18 years of trading experience. Is that correct?
Actually, it was 19 this year. I need to update that, but yeah, I've been doing this half my life now. So
before we get into your perspective of the market and what you're seeing,
sure.
real quick, how did you get into trading? How did you fall into the passion for it and now still being in the game 19 years later?
That's fair. So, I mean, I know it sounds crazy, but a lot of it started with my upbringing. My parents, my mother especially, was a pretty savvy investor. And kind of growing up, we had a change jar and we used to go cash it in. And she used to tell me, okay, whatever you decide to put in this investment account, I'll double it. And I'm like, okay, cool. So when I was, 8, 10, 13 years old, we're putting in, I put in 300, she'd double it. And then I got to choose what stocks I wanted to get involved in. So as I got older and I turned 16, 17, that $5,000 that we invested when I was a child ended up being like $37,000, and I was able to buy my first car. And just basically ever since then, I was like, okay, this is it, right? So, after I got out of school, I was always fascinated with the markets, and I was actually in the real estate game, and I had some money that I made from real estate ventures, and I started trading Apple stock. And I don't know if you guys remember Apple stock, 20 years ago, but it was $700 a share. It was ridiculous, right? It was before the split. And I basically realized very quickly that I was undercapitalized. And that's kind of where I fell into options. And it was really interesting hearing you talk, AJ, because I'm a huge premium seller myself. I think it's a great passive income, and I like the strategy that you pointed out. So that's kind of how I fell in bed with it. And ever since, really since the childhood and basically since my 20s, I've really just been in love with it.
And so now you're running Vici Trading Solutions, which is, can you give just a quick rundown of how that came to be, how long you've been running, what the community looks like?
Yeah, absolutely. So Vici Trading Solutions is essentially a trading education business. I have, like I said, been trading for 20 years. I've worked at a couple hedge funds and investment firm in my career, but institution lifestyle is not for me. As you can tell, I'm home. I like enjoying, being home and being my own boss. So I took the money that I made and started doing my own thing. And as my popularity, increased in the trading community, a lot of people wanted me to teach them to do what I do. So it kind of got a little cumbersome. So I wrote a course, and then I started basically teaching people how to trade this way. And then one thing led to another. And now we've got, quite a few students. At one point we had 500 people in our room. So
yeah, your Discord channel rocks, man.
Thank you. Appreciate it. Yeah. So I am a trader, as much as I'm an educator as well. I trade every single day. And so I've taught a lot of guys in my room who've invested in themselves, and we lead to big profits. And it's fun because we have a consistent process that we can trust and we believe in, and we stick to it, and it works. So
awesome. Well, I'm going to go ahead and throw the link to your website, Vici Training Solutions, into the chat so everyone can go check it out. And with that, what is your takeaway with the recent rally? Are you surprised by the follow through?
I mean, absolutely. I mean, so the area that we came off of from the lows was extremely significant. That $4,100 area. It was just a massive amount of support and accumulation that led to a very large push up to begin with. So it really doesn't surprise me that we held that. Now, I will say one thing that surprised me was the intensity and the momentum that launched out of that hole. I mean, I was telling everyone in my community, because we had a large bullish imbalance, which we can get into later if you want. But basically, I knew that we were kind of looking for about 44.80. But they really, like, after that, they just kept going and kind of caught me off guard. And I was told that there's a lot of gamma squeeze going on and so on and so forth from all the options plays. Mm-hmm. And one of the things I wanted to point out, AJ, you had a beautiful summarization of the retails and the earnings. But one thing that you didn't mention that I definitely wanted to point out is this is buyback season right now, right? So all these huge companies that are buying back stock, they have essentially a little bit over a month to buy back as much stock as they can, for the tax harvest purposes.
That's right.
So, in combination with seasonality, then you've got these big companies that are buying back their own stock. And then we're coming into what you basically said, which anybody who's in the retail business knows, most businesses make 50 to 60% of their yearly profits at Christmas. So we've kind of entered this trajectory phase right now this time of year. So did it catch me off guard? A little. I mean, the rally didn't, but the momentum and the insanity of the push certainly did. I didn't expect it to push quite as hard. So.
And so with that, what is your advice? How are you positioning yourself to take advantage of it, and or what is your strategy to, a move like that? What products are you looking at? What is your because we're on the show talking mostly about options and premium selling. So have you taken advantage of the jump? Because I'm assuming yes.
Absolutely. So I'm a futures trader. I used to be stock and stock options, and I kind of migrated over to futures when I was doing market making at the CBOT floor. So I kind of transitioned into market making when when the floor was open. So long story short, they have the indices, or the ES, which is the S&P 500 futures. So I do trade that on a regular basis. I've been trading it basically every day for the past 5 years, and we have been able to capitalize on this move. And I will say, very similar to what AJ is thinking here, that after we've had a really impulsive move up like this, the market is basically just kind of chilling right now, and they're digesting this, and they are what I would call accepting value, right? So that's like a profile perspective or a market profile perspective. I'm a floor trader, so I use market profile, but we often call this like this move up where they balance. We call it accepting value. So once they've found that, okay, this is a good value, then we'll continue to move up once again. However, even though I do think that we're going up, the risk to reward right now where we're placed at is pretty risky. I mean, I do think it's possible we could come to 4,600. It's definitely possible, but the risk to reward currently where we're sitting, and I don't know if you've looked at Apple and Google, and everything's way up there. I mean, Microsoft's way at all-time highs. So the risk to reward right now is a little sketchy. And it makes for a very tough market condition, and doesn't mean that we can't go up. I think that we will, but it's tough trading right now. So certainly be careful.
AJ, do you have any follow-ups to anything specific that Ryan was saying?
No, absolutely concur with all of that. I mean, we've been looking at the quantitative kind of analysis, and we know that at 4,600, there's a whole bunch of folks ready to start selling so that they can just get out of the market and be able to go home and not have to hold secrets with their better halves about where their money's gone for the last 3 years. But other than that, yeah, it's kind of sketchy, right? It's some scary. There's some thoughts out there. It's interesting. I was looking at what the investors are thinking about for Fed decisions moving forward. I like to check in with this every week.
Nice.
And I was
like
just checking in, and almost 100% think that nothing's happening in December. Same thing in January, end of January, almost 100% think that nothing's going to happen. And then it's interesting, in March, there's some folks that actually, and by May, they actually think that the Fed's going to start dropping rates. Wouldn't that be interesting?
I've heard the same thing. Yeah.
Of course, this is just investor sentiment, and it changes just like my hairstyle changes. So
Hey,
we'll
so
see.
I just to touch on this since you have this open, I was reading an article, I think it was yesterday or something. I actually retweeted it. I thought it was interesting that the media and the government and everyone else that is in the powers that be, they are claiming that inflation has almost met their 2% target rate and that it's actually going to go lower. And I got to tell you, I go to the grocery store, I can't tell, but it's amazing what they tell us. And I don't know if it's BS. I'll be quite frank with you. Maybe it is. Maybe I live on a different planet. I don't know. But I find it quite interesting that you talked about CPI and all this stuff. And like, life's great, right? It's like, wow, couldn't be better. But I mean, if you guys been to the grocery store lately, it's certainly not better, right? So,
No, right. There's the monetary policy, and then there's the fiscal policy, which kind of makes sure that the money that's in circulation, gets balanced out and doesn't just wind up in one person's pocket and not the other. And we know, if we hear any of this shenanigans about what's happening with our legislative branch of government and all the other branches for that matter, that they really don't have their house together. So for the fact that they can't even pass a budget that's more than like a month in length makes it difficult to keep that money, going where it needs to go. So yeah, I'm not surprised that the average person, I know that I'm paying more for my grocery bill than I've paid ever in my life. But
it's unbelievable.
yeah, the data, and it's funny because the Fed took so many fast moves that you really can't pay attention to the yearly number anymore because it's changing. Yeah, so you almost have to take the monthly number and multiply by 12, right? So 0.2 times 12 is around 2.4. And I guess people are assuming that it's actually going to keep slowing past 0.2. So I see where they're coming from in their forecasting, that they're not trusting the annual numbers, but they're actually future forecasting. But we won't know until it's in the rearview mirror, right?
Well, I know this sounds wild, but I'm going to kind of throw this out there. So this is the first time in my lifetime, and I'm 41, that we've dealt with this type of thing. When my parents were buying a house, interest rates were 18%. I think they had on their first home, right? And so as obviously as I didn't have to deal with any of that because I was a child, but I do recall that in 2008, the mortgage rates were basically where we're at right now, right? And so the Fed cut everything to help stimulate, everything. And we had this massive, 15 years worth of growth. And so now they've backtracked. But what's really interesting is, now we have rates kind of right where they are. But the issue is housing has doubled, everything has doubled. The cost of everything has doubled. So it's like, even though we're kind of like in the norm, like this is the first time that in my lifetime, even though I've been trading 20 years, that I've had to deal with this type of situation, which is kind of incredible if you think about it, because we're dealing with a generational, type thing. Like I may never see, well, I'll definitely never see the 2% rates again. That's over with. Maybe my kids will, but this is like, it's just really interesting, the cycle that we're in, I guess. And I just wanted to kind of point out how this is so generational that even 20 years in the game, this is my first time ever experiencing this. It's like, some traders have never traded a bear market before. I've never had to deal with inflation. Like this is all new to me. So
isn't that interesting? Yeah, I grew up with it, right? Because I grew up in the 70s and the 80s, so I saw all of that. But yeah, it's that we've had 25 years of almost zero interest rates for the majority of the time. And lots of quantitative easing since 2008, so cash hasn't been a problem. Now where they're doing quantitative tightening, so there's a whole generation of folks that totally haven't seen what was the truth for like 100 years before, like 5 generations before. So a lot of people are taken surprise. I get it.
And one of the things that might have a significant impact on inflation and pricing, and that is what we can get into a little bit deeper here. So usually at this time of the show, AJ would give his pick of the week, but this week
I'm passing it on to
we're gonna go ahead and give it to Ryan to see if what he's looking at in his pick of the week. So Ryan, we went ahead and pulled your screen up. What are you looking at? What do you want to dig into? I think the name of the game here is oil.
It is. So before we got there, if you don't mind, what I'd like to do is kind of show you some of the trades, because the market has been a little wonky, right? It's like been a little overly aggressive and hard to kind of get up. So I've been kind of looking around elsewhere just for trades, because that's what we do, right? And, you know, I've really been wanting to position myself in commodities lately, because I do feel that we could potentially enter some sort of a super cycle for commodities. Okay. And, you know, we've heard people talking about $150, $200 oil, whatever. But one of the things that people tend to kind of forget about, kind of in a sense, not really, is metals, right? So we've got gold, which is a huge not inflation, but a huge hedge against risk. Yeah. And the other one that's really big is silver, right? So silver is used huge in manufacturing. It's still cheap. And it's something that I've really kind of been looking at a lot. So I wanted to go over just a few key trades, if you don't mind, Sip, that I've taken and that me and my team have taken. And then we'll get into oil, because I have a whole presentation for oil ready.
The floor is yours, Ryan.
Cool. So this is a silver trade that we took, and it was absolutely fabulous. You can kind of see right here, this is actually a tweet that I pointed out for people. And the arrow is when I tweeted this. And then down here in our community, for big key trades, I always have alarms that go off. TradingView is kind of nice for that, because you can set alarms and it pushes a webhook to my room, my community, and then everybody gets to see it. And I can set them. Literally, we waited for this trade for 6 months. So, you know, it was nice to kind of have that alarm. And then, you know, we wake up one morning and we're like, oh, we're finally here, right? So this was kind of a cool trade. As you can see, we were really looking at this alert here. That's 21.030. This is our big main monthly level. So just so you guys understand, the way I find support and resistance is a sophisticated and extremely accurate approach. Yet it's very simple to learn. Okay, so you know, this is one of the things that this is a key level that we look for. This is what we would call a leg start. So this is where basically the accumulation that led to this high here. So when we came back down for this first test, we were very interested, and I warned the room that we were coming down here, including the people who were on Twitter. So, you know, kind of give everybody a heads up. And that move actually pushed 16% in silver. Now, I don't know if you guys know anything about silver, which you may or may not, but first off, a 15 or 16% move in commodities is massive. Okay, huge. And silver, whether people know it or not, is $50 a tick. I mean, this is a very, very heavy product, right? It's kind of like a little baller product. Like, you got to have a little Sacchiolo to work with this one here. They do offer what's called micros, but you know, the big boys play over here. Okay, so this was a fantastic trade. We barely took any heat on it, and it paid us for 15%. Now, I am flat on this trade. We took profits here, but this was a great retest for the next pop up. So that was a cool trade. I wanted to show you that. The next one I have here for you, it was really nice. I mean, this thing just really paid up really well. Let me find this AJ here. Let me move this over here. All right, so the next trade I got for you is a really good one. So this just kind of follows suit. So this is gold here, guys. So gold is the same trade, because they do tend to follow each other quite frequently, right? So this also, you know, was a tweet that I put out into the room. I took this trade. We made over $100 on this trade, guys. So just so you guys know, a futures contract is $10 a tick. Every dollar is worth $100. We moved $100. This was a $10,000 per contract trade. This is a gangster trade, guys. I'm sorry. I hate to toot my own horn here, but I'm pretty proud of this one. Okay, so you know, this is good. So anyways, we had this alerts here, and you know, we came down and we played the same thing. This would be my leg start, and you know. Warren Buffett said it best, and I'm that guy, right? I'm always buying when everybody else is scared, and I'm always selling when everybody else is greedy. That's just how I do it, right? So I'm constantly buying bottoms and selling tops. But based on my approach, I kind of have an idea of what is important and what's not. I mean, you can see from these levels that they play pretty well, right? So we played this monthly level, we popped up. We were looking to take profits all the way up into here, 943, and essentially we were out right about $2,000, which was pretty cool. So I do want to show you this one here. This is kind of a follow-up, just so you know. So, we tweeted about this a couple times, and this is where my first tweet, I couldn't believe it. I mean, literally in a matter of less than a week, we were up over $100 from our original entry, which was super. So, the guys in the room just absolutely killed it on that one. I was really proud of this. So, do you guys play in gold at all? Do you play in the hedge? Do you deal with that, or do you look at it? I'm just curious.
We'll do, stocks that are gold miners, or we'll do some
Miners,
ETFs.
Yeah.
Like Eldorado Gold is one of our favorite. Pan America Silver. In fact, I see we were talking about Pan America Silver in my room last night in my workshop, and it looks like one of our folks wanted to get further in depth, so they put it in as one of the tickers in our speed round later in the show.
Cool.
So yeah, but we don't actually, get involved directly with the actual commodity like you're doing. That's kind of cool, the future.
Yeah, it's fun. It actually is a lot of fun. So this is now, AJ, I've heard this is a little messy, and we're going to kind of get off subject here. We're not off subject, but off the gold topic. But this was another trade that we took that, guys, I know that you don't do crypto, AJ. I know that you are kind of like anti-crypto from what I understood. Okay, a little bit. But I got to tell you, I love it. Okay, so I've been in it since 2016. I've caught the bull run the first time when it went from 4 grand to 20 grand Bitcoin. I did it again in 2021. And, we caught basically 6 grand all the way to 60,000. I mean, we just absolutely kill it. Like, this is kind of my thing. So this is a crypto coin. This is called Rune. This is one of my favorite altcoin projects. And anyone who doesn't speak crypto, an altcoin is anything but Bitcoin. So, pardon my French, but there's this is also known as a quote unquote a shit coin. Okay. So you guys may have heard that terminology around the social media, but this is a shit coin, but it's one of my favorite shit coins. Okay. So I've been talking about Rune since before it was $1, right? Look at this Rune sub-dollar. What a steal. So that was way down here. So we actually played this 78-cent weekly. And then they popped up and they played this $1.49 weekly. And then this thing just took off. I don't know if you guys can actually see this, but this launched 759%, guys. 759%.
Wow.
And it did it in 3 weeks. Okay. So I was being conservative. I bought 1,078 of these things for $1. Okay. I just looked at this last night to do this for you. I'm up 509% on this trade. So I turned $1,000 into 6 grand. And it's just these are the kind of things that are just, they're crazy, right? It's mind blowing. And then here's a closer picture just so that you can kind of see this push up. But that was the first touch of that weekly. And then they popped up and they held this one. This was my second weekly in progression, and then just absolutely blasted off. So I thought you guys would enjoy that. I don't know if you have any people in the room that, and your viewers that like crypto, but this was a phenomenal project. And there's a lot of hype around Bitcoin right now with the whole ETF thing popping off. So I thought you guys would enjoy that. So
yeah.
We've talked about a couple crypto projects here or there.
Okay. So here, I'm sorry, go ahead.
I was just gonna say it's if we can correlate it to any of the options trading, that's still starting to evolve, but it is more of a directional play.
Well, here's one that AJ is probably very familiar with. This is Tesla. Okay, so Tesla is great in my opinion for selling premium because it's extremely volatile. I like the moves that it always gives off. I mean, it's one of the few stocks I've noticed that, I'll look to see if it's green or red, and it's always 5%, right? I mean, it's very rare that you find a stock that kind of jukes like that. But I mean, this thing is volatile, and I like it. So this is a trade that we're actually in currently right now. So this just happened on the 15th, which was 2 days ago. We had an alert for our room at $245 to get short. So this is an untested weekly level that I had here. So you can see this was our first target, which is 230. So our first target basically paid us $15. Okay, that was pretty big. I had 500 shares on with this one, so I mean it was a nice ordeal. I also sold the 250 calls up here. So this actually turned out to be a great trade. This is our final targets down here, guys. Just to let you know kind of how my color scheme works. Purples are untested weeklies and the red are untested dailies. So I'm looking for this to find support down in here and pop. And just to kind of show you, what's happened today. This is today actually right now. we're still starting to come down a little bit. So I'm looking for a little bit more downside. We've already taken most of our profits off, but yeah, this is just a great trade. So I thought you guys would enjoy kind of seeing this, and this is still in play actually as we speak.
So then let's jump into oil, right? Because oil is tanking, right? And there's opportunity to downside.
Absolutely. So it's really interesting that you brought up the whole oil thing, because oil is kind of at a critical spot for me right now. And so let me pull that up for you guys, okay? So check this out. Let's see here. Let's see what we got, AJ. You're going to like this. Okay.
I'm liking it all so far.
Good. That's what's up. So let me see what we have. Monthly out. Here we go. So just to kind of show you guys how I do things, and this kind of goes into what we're going to discuss later, but Sip kind of rolled right into it, so I'm going to do it. So the way that I trade is I section everything off into time frames. So I don't use any indicators. I don't use gammas and all this to find, things. I literally use just a chart and candlesticks. So it makes my approach extremely unique and extremely rare. Okay. But these levels are derived from key areas that I can show anyone how to find, but you can kind of see how these levels, they play pretty good to the point where they kind of section us off. So it's like below here, we could come down here, above here, we could come up to here. So that is how you do it on the monthly time frame, right? So check this out. So we got, let me see if I can pull this up here. So here's what it looks like on a little bit. It's the same situation, but it's a daily, but you can see how these daily timeframes interact with these monthly levels, right? So I wanted you guys to be able to see kind of my approach to this and how I'm looking at this, right? So check this out. And we're going to kind of get more into this right now. So here's the weekly area, what you were talking about, and Sip, and how it was coming down. And is there an opportunity for more downside? I think it's possible. However, I don't know if you can see this area right here, right? This was a massive accumulation phase for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks before we blasted off. So for almost 2 months, we stayed in extremely tight range. So right now we are coming down into this support. I mean, we are all in it right now. So do I think we can come a little lower? Yeah, I think it's possible we can make one push lower into about the 71, 75 handle. But this is support, guys. So there is a very good chance that, that this holds and we push. If it doesn't, we come down to about $68, which I'll show you. But I have a strong feeling that we're probably here. I mean, for those of you guys who maybe looked at oil yesterday, we fell 5.5% yesterday. I mean, it was an absolutely insane drop. I couldn't, it just wouldn't stop. I couldn't believe it. I mean, they would not get off, the neck of these sellers. It was absolutely incredible. So with that being said, here's kind of like how we look at the approach. So this is a daily time frame with just the weekly. So I took the monthlies off and I showed you just the weekly here, because now instead of looking at the monthly section, now we're looking at the weekly section. And you can kind of see how this was the weekly support. If you can see this here, and they held that and pushed up. We played it perfect, right? And then we came down. So now we're all in this area here. So here's going to be the real key, guys. Essentially, if they can get back above $75, they'll get some follow through. Okay. If they don't, then we're going to make one more push low and poke a new low. So that is essentially the way that I'm looking at it right now. And let me see if I can find like a good chart here for you. I made this for you guys. Check this out. So here is what my final charts look like. Here's how I trade every day, guys. So this has the monthly levels, which are the solid, the weekly levels, which are the dash, and the daily levels, which are the dot. So you can see we came right down and played this daily, and I was very long here yesterday. And I want to go over some of these trades with you guys, because I think this is really important. But I think on this smaller time frame, I hope that you guys can see this level of congestion here. And this area right here, which actually has ran all the way over here. Look at this level, how it played here, here, here. And then guess what? We played there yesterday again. So this is, the markets kind of have memory. There's certain key levels that continue to play over and over again, no matter how long time spans. And so we are back into a very, very important spot which is why crude is up $3 today. So I mean, it's really popped very hard, and it's actually right back into here, which we'll look at here very shortly. But yeah, I just, I wanted to kind of show you guys my approach in the way that I look at it. And as you can see here, this is so this is everything on a 4 hour. So this was a great short that we actually took, and I'll show you here in a second here. But look at this perfect touch. This is what the support that was lost that I showed you guys here. You see this big area here? Once they got below it and they played this weekly support, in order to make a move higher, they had to get above this. So here's my philosophy, guys. What was once support, once you lose it, now becomes resistance, right? So, if it holds things up and then you get underneath it, well, guess what? You're gonna have a problem getting back above it. So this right here was essentially our trade. And we took this and we rode this down. And so this kind of gives you an idea how my charts look. These are my exact charts. I drew these, and this is exactly how I trade. So I don't know. Cool. I hope it gives you guys some ideas here. And just to kind of show you, check this out. So this was for the room. This is me. I'm getting filled on my short. You can see it's the very top tick here, right? 77, right? And then later that afternoon, I said, if this thing's getting sucker punched, my guess is that we make new lows underneath $75. Now, mind you, this was at 79 3/4, right? So I'm making a call that this is going to come down basically $5 from here.
Yeah.
Because I know that if we can't get above this, we have to make new lows, right? And so this was our target. And I hope that everybody can see this. We actually swung short this for 3 days, 577 ticks. It was 7.2% gain on this. And it was just, it happened quick and it happened fast. And I just couldn't be more excited. And so last but not least, I'll kind of leave you with this. Here was our end of the day yesterday. This was a big trade for me. So this was the end of the day yesterday. These are all my fills, okay? And then these were all my exits. I actually got long off of the 72.47 down here. I was very convinced this was going to hold. And we had 45 contracts on, guys. So I don't know if you guys know anything about futures with oil. It's $10 a tick. I had 45 of them on, so we're talking $450 a tick. It was a $22,000 trade. So it was a big score yesterday for our team. Just super excited. And yeah, so that's the spiel on oil. So what do I think? I think we could potentially be a support, AJ, and I do think that we could potentially move up from here, provided it can actually get above something significant. So we'll see what happens.
Now with that, we do need to let the viewers know that 45 contract $22,000 win could very well be a 45 contract $22,000 loss.
Of course.
And so risk aversion and having your stop losses and knowing what you're doing, it's very, very important. And that's why it's important to have a coach, have a trainer, work with the community so that you're not on the opposite side of that. But Ryan, that was very impressive breakdown. I think we're very thrilled with having you on the show, giving us a little bit of breakdown, giving our viewers a different perspective of a different market, a different approach, because we tend to focus on the option side of things. And we'll keep an eye on oil. So if anybody watching has a question, wants to get in touch with Ryan directly, head on over to the site, check him out on Twitter. He does a great job of posting a lot of these things on Twitter. And we'll have to keep.
We'll have to follow up with you like in a month or so and see where these things are at. We'll do kind of a circle back and have you, based on some of the hypotheses you shared today,
please do
how they play out. Yeah,
that'd be great. I look forward to it. Thank you guys so much for having me.
Oh, absolutely, Ryan. That was awesome. Ryan.
All right. Enjoy the rest of your day. Enjoy your Thanksgiving. Be safe.
AJ, appreciate it again. So talk soon.
Adios. All right, AJ.
That was good. That was awesome.
Yeah, I mean, I've been in some of those futures trading rooms, and I mean, $22,000 win is great, but a $22,000 loss is painful, and that's maybe that's a little bit too risky for what we do, and that's okay because different investors have different appetites, and as long as you educate yourself and you approach things with the right mindset, you should be good.
And size your positions accordingly, folks. So if you think that you could lose 50% or even 100%, then you do a smaller position. So if you have that much loss, it won't affect your overall portfolio. That's how
Uh,
you do it.
all right. So big thanks to Ryan and Vici Trading Solutions for
We'll check in
stopping
with
by.
him in a month or so.
With that, we've got a little bit of time left. We've got a few speed round picks, AJ.
Let's do it.
So let's run through it. I know that you mentioned there was a silver play, and this is
Yeah.
Frank from Melbourne, Australia, interested in Pan American Silver, PAAS. What
Yeah.
are you seeing?
Well, I got to first preface this one with I traded Pan American Silver from 2020 up until 2022. This was one of those positions that, blew my mind that I was able to pull out 14 months of income from it. Usually I get about 5, 6, maybe at the most 7 or 8 months. I got 14 months of ongoing income from this exact ticker. Now, it's been acting a little bit squirrely over the last year, but it looks like it's back into a pattern. And Frank, I think that you're onto something. It looks like we got a signal on Wednesday evening and probably some follow through on Thursday. We've got a dividend that was released. We've got positive earnings. It ticks all the boxes of a great candidate. And when you take a look over here at liquidity, well, first of all, the options are trading every dollar. So that means we've got the granularity to be able to architect like the most precise trade possible. And there is enough liquidity for us to be able to do protective options, do substitute options, do actual premium selling options. So, Frank, I think that this is a great candidate to be focusing on. If you didn't catch the signal yesterday, it looks like we're going to have an opportunity to retest and possibly get at it again. And so, and if you're not comfortable yet with premium selling, this is where I'd like to have you guys do a simulator or a paper trade on PAAS. Get your initial covering position in place right now, just like Frank is. And then when we hit a high, if it doesn't make sense to get out of the trade, instead we'll sell some call premium and buy some protective puts, probably with the strike price down at $13.
Yeah, awesome price point. Probably pretty liquid on the
Affordable.
option side, I would guess.
Absolutely.
A nice little alternative to the super expensive, volatile silver futures contract.
Yep.
All right. So thanks, Frank. Moving on to our second name. This is John from Annapolis, Maryland, interested in Kinder Morgan, ticker symbol KMI.
Kinder Morgan, you can't go wrong with this company, can you? This is a lot of essentials, a lot of, they're not going anywhere anytime soon. They're one of those boring stocks that I like. One of the things, though, I've been noticing lately on Kinder Morgan, and so for John in Annapolis, Maryland, I want you to notice the same thing. Every once in a while, more often than not, we get these bars that have a large true range. The true range is the measurement. It's the greater of previous day close to high, previous day close to low, or open to close, or something like that. Or no, low to high. So whichever of those is the largest number, that's your true range. Basically, it means that you've had a volatile day. And so you can see that we've had quite a few of these volatile days. They're like once every 5 days, there's a big move. And so that is a little bit nerve-wracking when you're a premium trader. What you need to do is you need to test a couple of different top and bottom signals and see if you can get one that the one I'm using right here is the fast MACD. And instead of using the closing price to calculate it, I'm using the volume weighted average price. And it looks to be a little bit lagging. It's too slow. So you'll want to find something that's operating on a little bit faster pace to give you that signal more often, right at the top and right at the bottom, rather than 2 or 3 days. Because in 2 or 3 days, you could be from the top of the channel all the way down to the bottom. But I like what you're seeing here. We've traded Kinder Morgan with premium trades for like the last 15 years. We already had a bottom. We're already towards the top. So, the next logical move, if you're not already in this position, would be to either buy some back month deep in the money put options or short the stock. And it's cheap enough that you could short the stock, and then you'll be ready to go for selling put premium. So yeah, I like it. You just not have to make sure that you're using a fast enough trigger signal. The one that I'm showing here is not fast enough.
All right. Thank you, John from Maryland. Moving on to our third speed round name. This is Julia from Atlanta, Georgia, interested in Wells Fargo. Wells
Wells Fargo.
Fargo, ticker symbol WFC.
All right, so this is a good, this is a financial play. They've already passed earnings. They've already given out their dividend. And in addition, they're one of the bigger banks out there, so they're too big to fail. They've been scrutinized. They're passing all the tests, yada, yada, yada. We've got some overhead resistance, it looks like, coming up at about 43.50. We'll have to see if a signal comes there or if it continues going up. Right now, Wells Fargo is showing in the short to medium duration that it might be in an uptrend. So we're curious on whether it's going to find a top here at 43.50. It's logical that it would. There's been quite a few tests. There's quite a few people who are into trades who will start selling at that level, kind of creating a self-fulfilling prophecy. So what we always say, which is, you don't want to do the trade till you see the signal, and it's not just a plain signal, it's a validated signal with follow through. But if you see that signal, very similar to what we were talking about Kinder Morgan, I could see, you shorting the stock, or for a cheaper variation, there's plenty of liquidity. For a cheaper variation, we can go far out in time. And I'm talking about far out in time, like, you see how I'm scrolling down on the option chain? Like June or July of 2024 at the soonest, maybe even going as far out as the January 2025 leap. I'm talking going far out in time. And then when we say deep in the money for a put, it means that you're going to go higher in the strike price. And I'm looking at this extrinsic column and I'm looking at this mark column, and I'm thinking that maybe we're thinking this 52.50 or even this 55 strike price option, one of these two, out in the January 2025. Or like I said, you could probably go with the September, July, or June at the soonest, but probably going that deep in the money. And coming back to that January 2025, which would you rather, be on the line for? $42.78 a share or $10 a share, 1/4 of the price. So I could see why you might want to do a position like this. This might make more sense than doing the stock itself. And that would set you up. That would set you up for then being able to sell put premium and buying collective calls and turning this into a moneymaker. Again, the only thing I have to emphasize is let's make sure that top signal is clear, it's validated, and it has follow through before we actually do any of these transactions I'm talking about. And when in doubt, paper trade it. Make sure this stuff works for you.
All right. Thank you, Julia. That sums up our speed round. And we do have one final question from one of our viewers that I think is very worthy of a analytical, in-depth response. And let me pull it up here. This is Manny. Wanting to know, AJ, the difference between using a stop loss order or a protective option to limit risk. What's your perspective there?
Manny, are you in 5th grade now? Are you in 6th grade? Maybe you'll write in and tell us what grade you're in. Last time I thought we talked, you were in 4th grade, but that was a year or so ago. Okay, 2 different ways to manage risk, Manny. One of the ways is an active approach. The stop loss order actually, if you're getting into a risky situation, it basically automatically and it depends on how you configure this order, will automatically cash out of your position. So that's going to stop the risk right there. That's going to end the trade right there, put you into a safe cash position, and whatever, loss or gain you took on at that point, it's locked in. The other way is a protective option. So instead of actually liquidating your position, stopping the trade, what a protective option is it's a companion trade that we put on that will uh, offset the losses. So if your main trade starts to lose, the protective option gains at the same rate. So when you look at these two positions together, the risk stops, and it usually kicks in at the protective option strike price. So until you hit that strike price, it does its thing. But at that strike price, it then offsets the main trade. I love protective options because they're passive, right? They don't kick you out of any trades. They don't rely on a transaction taking place. They just work. They work after hours. They work if the stock price gaps up or gaps down. They just always work. Whereas these stop loss orders depend on trading hours. They depend on liquidity. They depend on actually your broker. And if your broker has priority or secondary, can they get the orders out to the market fast enough in order to have your stop loss filled where you want it to get filled? Things like that. So when you're talking about an active, there has to be a transaction that takes place. There has to be, the selling of your position to somebody who's willing to buy it. Whereas the protective option, it's just working. Now, the protective option sounds rosy and all, but, it's limited too. It only works at set strike prices. That's why when we look at those strike prices, Manny, we always make note as to whether they're going every dollar or every $2.50 or every $5, because that's where your protective option kicks in. You could have a stop loss order, set to trigger on the penny, whereas the protective option is going to kick in at those strike prices. Also, protective options cost money. They cost money up front. So in order to have a protection option in place, you have to place it and perhaps, put some of your, profits on the line in order to have it in place. So there's pros and cons to both. They're just two different philosophies on how to control risk. Great question.
Yes, thank you, Manny. Great question, great perspective. Variety of ways to get into trades, to protect your trades, to limit your risks. And so the more that one learns about those, the better trader they're going to be. All right. Well, we're getting to the end of our show here.
An hour goes by so fast, man.
So cool, especially when we have a special guest. So
Like Ryan,
once
he was awesome.
again, big thank you to Ryan. Go ahead and check him out on Twitter. Head on over to Vici Trading Solutions if you're interested in some of those approaches that he was showing us. I know that he'll be back, I believe, in December for something. So
we'll have to follow up with him.
Keep an eye out for any of those emails. Otherwise, AJ, heading into Thanksgiving week, is today options expiration day?
It is. November options are expiring this week. And so, next week we're thinking about the December monthlies. We're thinking about the weeklies. We're thinking about Black Friday sales and how that's going to affect retails. So even though it is going to be a holiday week and there's probably going to be, of course, there's no trading on Thursday, and then there might be half a day trading. I got to check my schedule on Friday. Even though that's going down, expect, the month of December starting, next week, expect to be able to be a little bit more fast paced. Again, like I've told all my traders, we're thinking nimble, we're taking more short term, we're thinking, tighter risk mitigations.
All right, and with that, we'll go ahead and close things out. Big thanks to Ryan. Big thanks to AJ. Big thanks to everybody that tuned in. If you've enjoyed the broadcast, feel free to hit that like, hit that follow, hit that subscribe button, and we'll do our best to provide you with the best trading, investing content that we can. If you have any questions, send us a DM. Head on over to the website. Ask customer support. Someone's going to be there to help answer your questions. Otherwise, we'll catch you guys next week on a full stomach. Stay safe. Enjoy the weekend, everyone.
Bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.